Welcome to my financial markets recap for the week. It's John Bannon here from ComhlaTech.com. Before we get to the news, quick update on the system. It's been a bit boring around here recently as we exited our last trade on January 4th, which so happened to be the very top of the market in the S&P. That was the all-time high. And that we've been sitting out since basically until yesterday. So, obviously I'm very happy to have been out of the market and to be watching the carnage from the sidelines. Crazy market. Normally I'd prefer to be making money, obviously, but sometimes it pays to sit in the sidelines and watch the carnage go by, and it really cratered. And now we can buy back in, basically. So it's been picture perfect so far, touch wood. Finally back in, and what looks to be the low, and it should be the low for a while according to our forecast. So things are looking really good. They're going really well for us this year, and everything's got really cheap without us. So great to see it crater like this for us, and hopefully we catch most of the ride back up. I will, of course, have another update on next week to see where the market goes. Very positive today. We'll see where it goes next week. So expecting more positivity. So that was the system update. What happened in the news this week? Well, the biggest news this week really was the Fed. Its press conference conclusion at 2 p.m. on Wednesday on its two-day rate meeting, and no other changes were made basically, and the very obvious plan they put in place that they've been saying for a while is the March meeting will be a rate hike, because that will conclude the buying of the bonds. And that seemed all fine and well until the questions came after from the reporters, and then it maybe went a little bit off the script a little bit. Pretty spooked the market, and when they started taking questions, so not ideal for the market, but certainly it seems to recover since then. Personally, I didn't hear anything controversial, but with the market being so jittery right now because the volatility is just through the roof, it's crazy. I'm not entirely surprised it dropped as the investors peer over every single word he was saying, and he's obviously trying to tackle inflation, and that's the big worry for investors, is how much are they going to tackle it by raising rates too hard, too fast, and maybe they didn't like what they heard. So there we go. Market came down, has since recovered. Other main news in the markets really is geopolitical. The risks going on between the US, the European partners, and Russia. Unless you've not been paying attention to the news, you'll obviously have heard that Russia has amassed a significant force at the border of Ukraine, and the markets don't like the prospect of warring nations, obviously. Especially the really big boys with all the really big toys, right? Which is what we're talking about here, the superpowers. So let's hope for a peaceful resolution here, with every side getting to claim victory in some way, and no needless loss of life realised. So that's certainly my hope for that. Who knows what's going to happen there, but scary stuff, right? On the earnings front this week, Apple had its best quarterly sales ever. In the 3 months leading up to Christmas, this latest report, despite supply challenges that everyone else was seeing too, showed sales last quarter jump 11% year on year. So an expectation beating $124 billion. $124 billion. That's a lot of money. So sales grew across every product line basically for Apple. So they're doing well everywhere except for iPads. No one seems to want iPads anymore, but there you go. The CEO, Tim Cook, also said that he reassured investors by saying the supply issues were easing from his perspective, so that had Apple really jumping, and really probably helped the market a lot today, because Apple is heavily weighted in the S&P 500. In other earnings, Robinhood stock fell 12% after hours on Thursday, has since recovered, but it revealed a wider loss than was expected and projected. Quarter one revenue that left investors asking, is that it? Is that your expectations? So very, very low outlook going forward. And investors have been asking a lot of tough questions recently because Robinhood stock actually has dropped over 80% from its high last August. So once valued at this $60 billion company is now just under $10 billion. So a massive drop in value there for investors. If you're into the IPO price, you're concerned about that, obviously. And a lot of this has probably got to do with the trading restrictions that were put on with the meme stocks last year when all blew up, causing multiple lawsuits since then to the company and damaging their "we are the champion" of the little guy, the little trader not charging commissions. So that really damaged their reputation there. And clearly a lot of people are not trading with them anymore. And lastly, on the notable earnings front, Tesla announced that profits were up 9 times compared to last quarter. Year on year, incredible leap in profits there for Tesla. The company had reported earlier this year that it produced 1 million cars and basically doubled deliveries, and in 2021. But despite the good news, the stock has dipped, and Tesla is warning about the ongoing production challenges, and that's why it didn't really pop very much. And of course, investors are always keeping an eye on the competition. This is a space that's really heating up very, very dramatically. Obviously, every man and his dog in terms of the car companies are now producing EVs, so they're not alone anymore, and they won't be ever again. Lastly, an interesting fact, the US housing market has gained nearly $10 trillion in value since the pandemic. That's about a 25% increase in value for US home prices, and it's probably the same in Canada and the UK and everywhere else. So for whatever reason, pandemic was good for house prices. So that's it for me. It's Friday. It's time to down tools. Thanks for watching, and bye for now.